2, 4, 6, 8. What should we depreciate? This plane. This plane.
Shinzeng does accounting.
Shinzeng does accounting.
Shing, 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 shing. Shinzeng does accounting.
Counting is cool. I love Excel. Counting more like straight money.
Shinzeng does accounting.
Debit the discount on bonds payable.
Shinzeng does accounting.
Shing, shing, shing.
Accrued expenses must be adjusted at the end of the period.
Shinzeng does accounting.
Today we're back at the Vancouver International Airport again, and we're going to talk about depreciation.
Depreciation?
Yes, depreciation.
If you say so.
Like we learned last time, companies are trying to match expenses to periods when those assets are used up. Some assets are used up all at once, like eating a banana. And there are other assets that will never get used up, like land. And some assets will take many years to use up. For example, this airplane. Okay?
Hubba. What you doing, Shing?
Let's say this company
Careful there, Shing.
spent $100 million on purchasing this airplane, and it plans to use it over the next 20 years, or let's say 50,000 flights. So at the end of the 20 years, or when we use up the 50,000 flights, we can also sell this plane at the residual value of $5 million, because the airline is planning to use this aircraft for 20 years. It should not just expense it all in the period when they made the purchase of this airplane. And they should also not defer all the expenses till the end of the 20-year useful life of this airplane. Imagine what it would do to net income. I doubt the CEO 20 years from now will be getting his or her bonus. Instead, they should be figuring out a way to match the expense with the periods when they use the airplane to make revenues. This is where we meet the hero of our story today.
Depreciation?
Depreciation. What is depreciation?
Tell us, Shing.
Depreciation is a non-cash expense that companies use to allocate the cost of an asset over its useful life. So there are 3 ways to account for depreciation expenses. First, straight line depreciation method. Second, double declining balance.
What's next?
Third, unit of activities. So which one of the 3 methods is most suitable for depreciating airplanes? Straight line depreciation is simple. It basically says, hey, if we're going to depreciate an asset over 20 years evenly, why don't we depreciate 1/20th of its value or each year over 20 years? So we'll take the initial value of $100 million minus the $5 million that we can recover at the end of the plane's useful life and divide it into 20 pieces. So that would be 100 minus 5 equals 95 divided by 20 years, which gives us $4.75 million depreciation expense every year. How do we make accounting journal entries for depreciation using the straight line method? We're going to debit depreciation expense, $4.75 million every year, and we're going to credit accumulated depreciation, $4.75 million every year. What is accumulated depreciation again?
I don't know, Shing.
Think. It's a contra asset account that will reduce the total value of an asset, okay?
Oh, okay.
It appears under the asset part of the balance sheet. So let's recap. What's the formula we're using for straight line depreciation method? It would be the initial acquisition value of this asset minus its residual value divided by the asset's useful life. Double declining balance is used for assets where most of its value is used up in its early life. For example, a phone. Whenever you purchase a phone, it's great for the first few days, for a few months, or, but by the end of like 3rd, 4th year, you just want to chuck it at the wall. We want to recognize more depreciation early on in the life of the asset and less later. We do this by taking 1 over the useful life of the asset times its current carrying value or book value. As time goes on, more of the asset's value is depreciated and removed from its carrying value, causing the amount of depreciation to get lower and lower each period. To make this effect even more pronounced, we can actually make this numerator a 2 instead of 1, hence double declining balance. Let's take 2 over 20 times $100 million. That means in the first year, we're going to record $10 million of depreciation. Next year, our carrying value will be $100 million minus the $10 million we already depreciated in the first year. This means our depreciation expense for the second year will only be $9 million, and so on. We have to remember to stop depreciating once we reach the $5 million residual value, since it's not baked into the formula. The unit of activity method accounts for depreciation expense based on how much the asset is used up from period to period. Just like this big activity I'm doing, going over the caution tape.
Careful there, Shing.
So let's say the airline expects to use or get 50,000 flights out of the aircraft, then we can figure out how much depreciation we should record for each flight. Well, how do we do that? We are going to use the initial value of the plane, $100 million we paid for it, minus the residual value, $5 million, divided by 50,000 flights that's expected to be flown by the aircraft, which gives us $1,900 per flight. Suppose the airline purchased the aircraft in 2019 when COVID-19 was just a twinkle in Mother Nature's eye.
Those are the days.
And back then, they were able to fly 3,000 flights out of this aircraft in 2019. But in 2020, with all the restrictions related to travels and borders, they were only able to fly 1,000 flights out of this aircraft. So how much depreciation expense should we record in those 2 years? So in 2019, it would be 3,000 flights times $1,900 per flight in depreciation, which gives us $5.7 million in depreciation. And in 2020, it would be $1,900 per flight in depreciation times 1,000 flights that's actually operated, which gives us $1.9 million in depreciation. And remember, depreciation is just a way to allocate the cost of an asset over its useful life using estimates. It doesn't really mean that at the end of 20 years, the plane is only worth $5 million, or the company will stop using it after it's being fully depreciated.
Shinzang does accounting.